Hello and welcome to another update video about DOT. DOT chart continues to move in this corrective pattern. It's been a quiet weekend so far, but the uptrend isn't broken and support levels are holding, and that's very important. The price has avoided so far to break below the ascending trend line that we defined in the last videos, and also no lower low has formed. So technically the overall uptrend could still continue here in wave 5. Now let's talk about the short-term bullish and short-term bearish scenarios on this chart. Please be aware, they are currently both part of an overall bullish thesis for DOT. And there are just two support boxes depending on which one is holding. It's either the yellow count or the white count. I prefer the yellow count, not only because currently it's not broken, but also because it gives us more clarity over the long run, more bullishness overall. So looking at the bullish chart, that's the yellow count, that's the bullish thesis, short-term and medium-term bullish. We've got a 1 to the upside, wave 1 of the October lows, shallow wave 2 pullback, a wave 3. All of this is, by the way, a diagonal pattern, can't be an impulse. Then a wave 4 to the downside. By the way, the C wave needs to sit here. Wave 4 to the downside and a wave 5 to the upside could be unfolding right now. This wave 5, by the way, let me delete that. I just didn't, 1 second. Let's do it like that. And then, so to keep the idea of an unfolding fifth wave to the upside alive, the following conditions need to be met. So obviously, as you can see, I see it as an ABC structure. It has to be that way because it's not impulsive. This is clearly not impulsive. It's a 3-wave move to the upside. Which doesn't allow me to have a very strong leaning to the upside. There is no impulse, so it could easily go down as well. Okay, so but we have very clear parameters to watch here that tell us when the white count is likely getting in control. The white count, we'll talk about that in a minute. Now in the yellow count, it is very important to, first of all, keep the invalidation point intact. So we don't want to have it broken below the 650 level. 650 is the level where, well, it's basically the make or break point. It's basically the level where it breaks. Then, however, it would be nice to have for the price to not even break below 680, because that's the previous swing low. With a break below 680, it's already likely going to invalidate. And even nicer to have would be if it can hold the trend line. That would indicate more strength. Then obviously if we find a turning point here somewhere, so I'm watching for a potential reversal here, it's not shown yet. Yeah, just watching for one doesn't mean it has to happen, but obviously I gave it just 3 levels that ideally hold. Breaking, each of these will reduce probabilities for the yellow count. But also it then needs to break above the $8.87 level. That's not only the previous B wave high, structural resistance, but also Fibonacci resistance. And then I think we are in wave C of 5 in yellow, targeting ideally $10.83 plus, maybe $11.78, stretch target $13. This would be the preferred count, the bullish count. In the short-term bearish one, which can also be bullish, but first of all, we would look at a deeper retracement, deeper pullback. Well, that scenario would be the white count, in which somewhere in this region a B wave top could form. Basically, we only have 3 waves up, so it could be an A wave into the December highs. B wave could unfold right now in an A, B, C structure. Bear in mind, B waves can also form triangles. I don't see evidence for a triangle right now, but possible. So yeah, and in this scenario, I mean, even here the B wave could extend a bit, but if it's topped, yeah, I need to see a break below 650 to confirm that, and then I think we're coming down in wave C. And it might target the area around 584, maybe 519. 439 would be quite deep for a C wave of wave B. But as long as the yellow box then holds, so below 650, the yellow support box becomes relevant. And only a break below 439 would really introduce bearishness, significant bearishness on this chart. But until then, we can watch for a bullish outcome overall. And then possibly as a result of the corrective pullback, a C wave rally that, as I showed you in the last video, could reach sort of $15 possibly. How do we determine that? Well, we take the length of the A wave in the white count. We have to assume, I have no confirmed low, but let's just assume it might get to the golden ratio there. Talking about $14.12, C waves can always extend, but that's sort of the first reliable level to watch. But the problem with the ABC structure is it will create a lot of uncertainty. Better is always if we have 5 waves up. After these 5 waves, we'll probably get another pullback and then a third wave rally, and that will be long-term much more bullish. That's my update about DOT. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure that you follow us on Instagram and Twitter for additional content. Thanks a lot for watching. Bye-bye.